There is a widespread cultural myth that succeeding in e-commerce requires you to quit your day job, source a trendy product from overseas, and spend 80 hours a week staring at a laptop in the dark. For years, the amateur playbook has remained exactly the same. Buy endless online courses, try to decode the latest platform updates, and fight blindly against an ever-changing Amazon algorithm. But high-net-worth individuals and seasoned professionals completely ignore this approach. They are actively capturing profits from the multi-trillion-dollar e-commerce boom, and they are doing it without ever packing a single box or learning how the platform's mechanics actually operate. Treating an online storefront like a demanding second job traps you in a cycle of trading your time for money. That active labor is exactly what prevents the average person from building actual wealth in the digital economy. The wealthy view e-commerce strictly as an alternative asset class. An alternative asset class is a category of investments outside of traditional stocks, bonds, or cash, such as real estate or private equity, used to diversify a portfolio and mitigate public market risks. If you want to invest in an apartment building, you don't grab a hammer and start framing the walls yourself. You provide the capital and you hire property managers to handle the tenants. A fully managed e-commerce store functions under that exact same logic. It operates as digital real estate. By structuring an online store as a passive investment vehicle rather than a place of active employment, you detach your personal time from the revenue. Your capital does the scaling for you. The internet is currently overflowing with how-to guides and tutorials. Buyers are experiencing massive education fatigue. They know the steps, but lack the time and energy to execute them. Smart money recognized this bottleneck. They stopped paying for educational courses and started paying for guaranteed execution. This chart illustrates the shift toward the DFY, or done-for-you, operational model. DFY is a service framework where a specialized professional agency handles every single aspect of a business, from initial setup to daily management and scaling. By transferring the execution risk to a team of dedicated operators, you eliminate the daily friction of running a business. That is how a demanding retail operation is converted into a true passive asset. There is a specific operational trap that catches most independent sellers. Those relying entirely on standard FBA, fulfilled by Amazon, often find their revenue consumed by unpredictable storage fees, labeling costs, and return processing charges. Elite investors use a different blueprint: wholesale FBM. FBM, or Fulfilled by Merchant, is an e-commerce model where the seller controls their own supply chain and uses independent logistics networks to ship bulk products directly to the consumer. This split-screen comparison shows exactly how the two methods stack up. By leveraging private third-party logistics networks and established wholesale supplier relationships, the FBM model bypasses Amazon's internal warehouse system entirely. Looking at the FBM model up close, avoiding those layered platform fees allows operators to protect their bottom line. The result is a highly consistent profit margin, typically holding steady between 15 and 25%. Securing your logistics off the main platform creates a predictable, high-yield investment, insulating your capital from sudden marketplace fee hikes. Generating steady profit is only one half of the equation. The other half involves leveraging legal tax strategies to keep that capital compounding. This ledger demonstrates how the wealthy utilize Section 179. Section 179 is an IRS tax code that allows businesses to legally deduct the full purchase price of qualifying software, equipment, and operational systems in the exact year they are put into service. Notice how that deduction is reapplied here. With a 2024 deduction limit of up to $1.22 million, investors can write off the heavy upfront costs required to acquire and set up these digital assets. Securing that immediate tax relief drastically lowers your base tax liability. That frees up massive amounts of cash flow, which can immediately be deployed to purchase more wholesale inventory and scale the store's output. When you pair a 20% profit margin with aggressive front-loaded tax deductions, you generate an exponential wealth-building loop that a standard W-2 salary simply cannot match. The operators managing the daily logistics generate the revenue, but the capital providers holding the equity accumulate the actual wealth. In the past, achieving this level of hands-off alternative investing required deep institutional Wall Street connections. Today, the digital economy has made these systems highly accessible. The infrastructure, from the logistics networks to the management software, is already built and fully operational. It is sitting there, waiting for busy professionals to deploy it as part of an automated portfolio. You supply the funding. The elite experts build and run the asset. Elite Automation has spent over a decade perfecting this done-for-you Amazon wholesale model, managing high-performing stores for accredited investors and high-net-worth clients across the country. Visit eliteautomation.com to book a discovery call. Stop trading your hours for an income and start investing like the wealthy.